obviously, we're thinking about the strength of the global economy now in the face of all of this uncertainty, particularly, I think, around trade and the different statements coming out of the US administration. How worried are you about the impact on the global economy?
Well, I mean, certainly we are starting this year, at least, from a very strong position. For quite, I would say, even more than a decade, we haven't had such a positive synchronized growth in most of the regions of the world. But as we always say in the BIS and as an economist, there are some risks. And the downside risks are pretty much what you said. Trade disputes can be very, very disruptive. Also geopolitical events. And I would say also the complication of how to normalize monetary policy in the face of very low interest rates and the possibility of bouts of volatility in the markets.
Well, you're going to be on, we'll have a panel this afternoon of the starred cast talking about central banks. I'll get to that in a minute, but just thinking right now about what you're seeing, you know, we have seen this soft patch, as it was called, in the Eurozone and in the US. And in the Eurozone, we saw this week some data to suggest it's maybe not so temporary. Do you see a trade uncertainty link to that? Do you think it will last?
Well, in the margin, there could be something about it, but I don't think it's that obvious in the case of the EU. Probably in the UK is having more of an uncertainty effect, as it's having trade uncertainty an impact on growth in both in Canada and in Mexico. So I think that in the continent, probably not so strong, but certainly in the UK, yes.
In the past times when we have had a move to more normal monetary policy in the US, it's spelt a lot of trouble for emerging market economies. And we have had a few shades of previous crises around emerging markets in the last few weeks. I know that you don't want to talk about individual countries, but are you concerned that some emerging market economies may not be able to cope with this new volatility?
Well, I mean, certainly it's a fact. There has been, in this very prolonged period of very low interest rates, very unconventional monetary policies, this major search for yield that has attracted a lot of capital to many emerging markets. Some assets are overpriced, and as normalization gets going and expectations get adjusted, I think that there will be portfolio adjustments too. And well, obviously that when it combines with idiosyncratic issues, and, you know, I can mention some names. I mean, it's not that I'm completely opposed to talk about some countries, but, you know, we have the cases that are very well known of Argentina, of Turkey, of Indonesia, where, you know, it's important for them to have mechanisms to cope with the external shocks, but also to strengthen their local economies.
We've seen a lot of different approaches. You mentioned Argentina and Turkey, I think, have had different approaches to communicating with the markets. What do you think are the lessons of the last few weeks, and particularly the role of the central bank governor?
Well, I would say that in both cases, I think what both cases have in common is that it's governments tinkering with the central bank independence. In the case of Argentina, I think a contributing factor was the fact that some months ago, the government sort of increased the inflation target of Argentina. And that was read by the markets as a factor that was not that positive. And in the case of Turkey, of course, the president being very outspoken about how monetary policy is conducted and how much influence he wants to have on the central bank. So I think both these examples talk about the necessity to leave central banks alone.
So you would, Christine Lagarde said today that she wanted to stand by the central bank governor of Turkey and give him his freedom. You would agree with that?
Absolutely, absolutely.
And we've had a little bit of a local disagreement here around the view on the exchange rate. Do you think that the exchange rate policy should be for the central bank to control or for the government?
Well, I would say that probably the central bank should have the last word, but it should be a shared responsibility.
What if they completely disagree on which direction it should go?
At the end, somebody has to prevail, and I would give it to the central bank.
Okay. Well, I'm sure the colleagues here would be pleased with that. On the future, you mentioned about the new phase of monetary policy that we're seeing. What risk do you see? The Bank of International Settlements famously was identifying some of the risks in the financial sector before the crisis, when many central bankers were not focused on them. What do you think people should be most looking at now in the financial markets?
Well, it's still a huge challenge that we haven't really found a way to solve in a comprehensive and solid way, and it's how can we pursue and obtain jointly price stability and financial stability. I mean, it has been done for many times, but when there are these major adjustments that need to take place in some of the policies, there is a risk that let's say now that we need to increase interest rates, financial stability might suffer. So we need to be very careful in how do we obtain both objectives at the same time. It's not obvious. That's the issue, and it requires a lot of skill. And all the central banks are thinking in this, and I'm very hopeful that we will get it right. Communication
is so important.
It's the key.
Finally, would you say that we should get used to central bankers talking less? Is there a risk that we've got used to hearing them tell us everything about what's going to happen?
Well, I think forward guidance is very important. Expectations is very important for financial stability and price stability. Expectations are basically formed based on information. So I think the central bank has to continue to provide appropriate guidance to anchor expectations.